And a big welcome back to CMCAP U. To our devotees who recall our previous conversation, last we met, we had a discussion about the impact of interest rates as it relates to the bond market. Wanted to add a bit to that lecture as there were pretty significant developments in the interest rate environment since we spoke last. On September 18th, the Federal Reserve Bank, commonly known as the Fed, decided to lower what's known as the federal funds rate by 50 basis points or 0.5%. This was the first rate cut since early on in the pandemic and was an indication that inflation was moderating and the job picture was weakening. The Fed funds rate, what is it? In simple English, it's the borrowing rate that banks charge each other for overnight lending, but it also has a direct impact on many other products such as mortgages, auto loans, credit cards, things of that nature. They also mentioned their willingness to further reduce rates with the expectation of another 50 basis points or another 0.5% by the end of the year. We needed it. So what does this all mean? Well, that depends on the sector. Let's start with bonds, the topic of our last lecture. If you recall, there's an inverse relationship between bond prices and interest rates. What that means is that when interest rates go up, bond prices go down. And we've seen a ton of weakness over the past few years in the bond market because rates went up. And as we said, bond prices, they went down. Many on Wall Street are theorizing that if we're now in a downward rate cycle and rates are going down, that bond prices should increase. And as a result, we've seen significant inflows of capital into bonds and bond funds. The same logic can be applied to preferred stocks. So what's a preferred stock? In short, it's like a stock or equity, but not the type of equity we see in the ticker on TV, zigzagging up and down on a day-to-day or minute-to-minute basis. Rather, a preferred stock is equity that has a senior claim to the assets of the company. What does that mean, senior claim? It means that any cash that's in the company's accounts essentially belong to the preferred stockholders before they get to the common stockholders. Meaning if the company has a chunk of money they plan on distributing for dividends, they distribute it first to the preferred stockholders before they distribute it to the common stockholders. It also means that if the company goes bankrupt, any cash first goes to the bondholders because their debt, they lent money to the company, but after that, it goes to the preferred stockholders before it goes to the common stockholders, which is the stock that we normally deal with. So in terms of risk, a preferred stock is somewhere in between a bond, that's the most conservative, and a common stock, which is the most risky. And because of that, the typical yield or return we get from a preferred stock is going to be higher than the yield we get from a bond, because it's riskier, but it's going to be lower than the yield that we would get from a stock because it's less risky. Higher risk, higher reward. Lower risk, lower reward, as we've discussed in the past. Although we call this investment a preferred stock, on a day-to-day basis, it moves more closely and resembles more a bond. And like the case with bonds, it's had a difficult time the past 3 years. And like the case with bonds, many people have begun to reallocate to preferred stocks and preferred stock funds with the expectation that rates are going to come down. We at CM Capital have done the same. The interest rate topic and how we attempt to profit from drops in the interest rate market is a very important one. And we're going to continue to unpack this topic as our sessions progress. So remember, the Fed lowers rates to help the economy, but we can't help the economy too much because it can trigger inflation. We've now turned the corner on inflation, so we at CMCAP U are thinking of best ways to position ourselves with interest rates coming down. We've bought bonds, and now we're buying stocks, preferred stocks, and preferred stock funds and ETFs. At our next class, we're going to discuss equities and some tools we use while picking equity investments. Wishing you all a great October and looking forward to seeing everyone in November. And now time for our PSA. As with all of our previous discussions, make sure you consult your financial advisor before taking any of these ideas And these are simply generic ideas. Everything needs to be done to the investment needs and to the risk tolerance of the investor. Have a great evening. Talk to you later.